One of the most interesting stocks right now is TROW Price, ticker symbol TROW. And the reason why this particular stock caught my attention consists of multiple reasons. For starters, the company struggled quite a bit with revenue growth for a while, but they managed to get back on their feet. But not only that, the stock has been trading sideways for over more than a year now. And at the same time they have this amazing dividend scorecard with some high growth stats. So in this video I will show you everything you need to know about this company and why I'm planning to add more shares anytime soon. So without further ado, let's dive into the recent earnings. TROW reported earnings on the 1st of November, while they beat on EPS and missed on revenue. And for the upcoming earnings next week, analysts have mixed feelings. So let's take a look at the detailed earnings, where we start with one of the most important numbers, the assets under management, reported at 1.63 trillion, up year over year and quarter over quarter. This is the first sign that the company is recovering after a few quarters of struggling. The investment advisory annualized effective fee rate is decreasing a bit, which is something to keep our eye on. Looking at the net revenues, we see that this number is also growing year over year and quarter over quarter. And so does the operating expenses. And most importantly for TROW, the EPS is growing at a really high pace now. And one of the things most investors love about TROW are the dividends. And in here we see that these are growing, but also covered very easily with the EPS, so this looks really good to me. Diving a bit more into the assets under management, we see that TROW took a beat in 2022, and 2023 was the year of recovery. In 2024 they did a phenomenal job in my opinion, and they are almost back at their all-time high again. In this graph we see the asset class, client type and geo breakdown. Looking at the asset class, we see that both multi-asset and equity are the biggest. And all segments are growing over time, which is the most important to me anyways. It's the same with the client type, and especially the institutional segment is growing here. And last but not least, the geo breakdown is also looking pretty good, with a really high focus on the US of course. But the areas outside the US are also growing at a steady rate. And keep in mind that retirement assets are 67% of the assets under management. Earlier in this video we saw that EPS is growing, and one of the main reasons for that is because margins are increasing again compared to the previous quarters. So this is also looking really good. Also because TROW keeps on buying back shares, which increases the EPS in general. And now that we know a bit more about the company, it is time to check the fundamentals. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to my channel to receive multiple analyses every week. And also join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue with diving into the fundamentals. TROW is a 25 billion market cap company. PE ratio is at 12, which could indicate that they are undervalued. Later in this video I will show you my 3 price targets for TROW stock, so make sure to watch until the end. Revenue is at 6.9 billion, and in this graph we see that revenue went up in the long run. And again we see that 2022 had a big impact on the company, but they have found momentum again. And it's the same story with the margins. It went up steady and consistent until 2022. From there it jumped off a cliff, and most recently we see that margins are recovering again. So to me this looks really good in terms of potential. For the EPS it is pretty much the same story, nothing really special to add here. Analysts have mixed feelings about the EPS in the coming years. Down the line they expect a slight increase in these 4 years, but it is going to be a bumpy ride. For the revenue growth it is pretty much the same story. However, Here it is expected to see a decrease down the line, which feels a bit odd to me. Return on assets is reported at 16%, which is a great number. The return on equity is also looking really good at 20%. But the most important number here, return on invested capital, is reported at 10%, which is a great number in general, but it is much lower versus the 5-year average, so that's something to keep your eye on. Current ratio is at 3.5, which is a high number, so definitely keep an eye on this number as well. The good part is that it is coming down a little bit. But here comes the great part. Right now TROW has 360 million in debt, and I prefer companies that can pay down at least a big chunk of their total debt with the total cash. TROW has 3.17 billion in total cash, so they can pay down all of their debt without any problems. And this is really impressive and comforts me a lot. But it is still very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, pay dividends and all other things. And here we see that free cash flow is going up in the long run, but it is not really steady and consistent, and it is also decreasing for 2 years in a row now. So that's also something to keep your eye on. Shares outstanding are decreasing, which is something that I really like. When shares outstanding are decreasing, it increases your ownership in the company, increases the EPS, lowers the P/E ratio, and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, dividend yield is sitting at almost 4.3%, which is a great number. Annual payout is at $4.96 and payout ratio is at 55%. I prefer 50% or lower. So right now they have 45% left in cash to pay down debt, do acquisitions, buy back shares and all other things. The 5-year growth rate is looking really good at 10%, and they have increased the dividend for 38 years in a row, which is really impressive. And if you take a look at these numbers, the dividends paid since 2015, we see that TROW always increased the dividends at a decent pace. And on top of that, in 2015 and 2021 they paid a supplemental dividend. And to me, this looks really good. I expect the growth to return as the company recovers. Payout ratio is a very important metric with dividends. It tells you if the dividends are safe. And here we see that payout ratio increased quite a lot ever since 2022. But from there it is coming down again as the company recovers. I expect that in the coming years it will go down under the 50% again. In this graph we see the expected dividends in 2025 and 2026. Of course this is an estimation and can be highly impacted by results, but it gives you a rough indication. It is expected to go increase at a decent pace from here. And overall these dividends look really good to me, but how about the historical returns? I decided to compare TROW stock with the overall market, in this case the S&P 500. On the 5-year chart we see that TROW massively underperformed the S&P 500, and in total TROW returned 8%. And keep in mind this is including dividends. The S&P 500 is sitting at 100%. On the 1-year chart it is pretty much the same story, with TROW returning 6% while the S&P 500 is at 24%, a big difference. On the 6-month chart it is getting pretty interesting again, with TROW having a lower return versus the S&P 500, and it kept on losing to the S&P 500 throughout the whole time. On the 1-month chart it is again TROW that is beaten by the S&P 500. So bottom line, the S&P 500 was the better choice in both the long run and in the short run. However, things are looking pretty interesting with the stock. So could this be the perfect time to buy TROW stock? Well, let's check the 3 price targets that I created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with revenue growth. For revenue growth I'm filling in 6, 7 and 8%, based on historical performance, their own outlook, but also because of the analysis. For the profit margin, I'm putting in 29, 31 and 33%, as I expect that this will recover in the coming years. For the free cash flow margin, I'm putting in 24, 26 and 28%. For the PE ratio and price to free cash flow, I'm putting in 10, 12 and 13. My desired annual return is 12.5% since I can get an easy 10% average annual return with owning an ETF. Right now TROW stock is around $114. I hit analyze and we see a lot of great numbers. We have a low price target of $90 to $110. We have a mid price target of $115 to $138. And we have a high price target of $145 to $170. And to me, the mid price target is the most justified here, indicating that this stock is undervalued based on these numbers. So what do you think is the most justified price target here? Let me know in the comments down below. My final conclusion is that TROW is a hidden gem in my opinion at this moment. Nobody is paying attention to this boring looking company that took a beat a few years ago. Meanwhile, the company is recovering, revenue is increasing at a high pace again and margins are increasing as well. And TROW already claims a decent position in my portfolio, but I can't wait to buy more shares. The fundamentals are looking promising and the dividends are great, and the price target is attractive as well. Now it is time for the company to keep on growing and start with the upcoming earnings at the beginning of February. So let's see what happens there, and hopefully I can pull the trigger anytime soon to buy more shares. And remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.